Hello, and welcome to this ARA webinar with staff from KeyBank. Today's experts from KeyBank will walk members through strategies to reduce credit card acceptance costs. In this webinar, we will learn how surcharge programs work, how they're structured, and how they can be implemented responsibly within today's regulatory environment. My name is Hunter Carpenter, Senior Director of Government Affairs for ARA, and I'll introduce our webinar speakers in just a bit. But first, I'll go over a few housekeeping items so you know what to expect. Webinars are an important part of the ARA professional development pathway and provide a great opportunity for ARA member companies to help educate their employees. Today's webinar will be recorded and added to the member-only ARA dashboard section of the website. And as a reminder, you can log into the dashboard to access past webinars at any time. If you do not have an ARA login, you can email info@aradc.org to set one up. Questions will be addressed at the end of the presentation, but you can type them into the chat panel at any time. With that out of the way, I'm excited to introduce our speakers, Chris Yelverton and Jamie South. Chris's career in financial services spans more than 25 years, and his role is focused on driving growth strategies across KeyBank's footprint, helping clients leverage technology to run their business more efficiently. Jamie is a channel manager at KeyBank Merchant Services and is responsible for referral partner embedded banking relationships. Without further ado, I'll turn it over to our speakers, Chris and Jamie. Take it away.
Thank you, Hunter. Yeah, appreciate everyone joining today. My name is Chris Yelverton. Really, the goal of this webinar is for everyone that's on this call to have a good understanding of surcharging so that you can understand if it's right for you and your business, and also have a good understanding of other avenues besides surcharging to reduce your overall card acceptance costs. The presentation today is interactive, so here in a few minutes, we're going to pop up a few polling questions, and it's always interesting to see how your answers kind of play into the material that Jamie and I will be covering today. At KeyBank, we've implemented hundreds of surcharge programs over the last few years across the country, and so our goal is just really to share with you what we've learned in going through that process. There's certain industries that surcharging has become mainstream, and it's really kind of starting to catch on in ag. It was mentioned by Hunter that the chat feature is enabled. We usually find that when we're giving these types of presentations, there's a lot of questions because there's a lot of moving parts. So please feel free to put your questions in the chat, and we have reserved time after the presentation to address any and all your questions there. With that, we will move forward. Just a quick legal disclaimer and covering compliance. We feel compliance with state and federal laws is one of the most important aspects of surcharging, and just making sure that, you know, if you're going to start charging a fee to accept credit cards, that you understand what those requirements are. There's certain state level requirements, and we'll kind of get into the ins and outs of that and what that looks like from a compliance perspective. In terms of an agenda, we're going to tell you who we are here at KeyBank, and then why we feel surcharging is kind of becoming mainstream across the country. We've got some good stats to share from JD Power that just talks about, you know, businesses that are surcharging and tags some percentages onto that. And then really kind of diving into what are the economics of surcharging and how surcharging is regulated both by laws and by card brands, and then kind of wrap up with what we feel should be your top considerations. As an ag retailer, what are the most important things that I should consider whenever I'm looking at this as an avenue to reduce my acceptance costs. So this is just KeyBank. This is who we are. We do specialize in ag. We have a dedicated line of business. We have about $2 billion in loan commitments across the country. A team that You can see on the lower right-hand side of the screen there, our footprint. We have offices from Maine to Alaska. All right, so this is a credit card statement that's been a little bit redacted, and we're going to, Hunter, if you wouldn't mind, kind of start off with our polling questions. With looking at that statement that's there on the screen, it's just a simple question, which is number one, are you able to comprehend your merchant processing statement? And we'll give it about 30 seconds for you to answer. Our polling, we decided to lump all of our polling questions together here. So the second question is, are you seeing a fee for credit cards being charged in your local market? So that one is the most interesting question to me because what we're finding in conducting these webinars is that generally varies by geography. So there's some variance there. And then the last question is, specific to your business, when is the last time that you replaced your credit card terminals? And we'll give it another 15 seconds or so, Hunter, before we close the poll and talk about the questions. All right, Hunter, you want to pop those answers up? All right, 75% are able to comprehend, which is, wow, we've got an educated group on here, Jamie. That's great. This is something that we'll talk about here momentarily. And are you seeing fees charged in your local market? So that was 83% yes. So that actually is interesting because I've got a stat to share from JD Power that is very close to that. And then when is the last time you replaced your credit card terminals? That's kind of varying across the board. 17% was recently. Also 17% was within the last year. The overwhelming majority, 67%, was over 1 year. And we'll touch on credit card terminals later on in the presentation. So before I hand it off to Jamie, what you see here, the credit card processing statement, it sounds like a lot of you on this call are familiar with how to kind of dissect those. That's an area where Jamie and I can provide assistance to you, and we're going to talk a little bit more about that. But that's kind of the goal of the call, is to help you understand how to comprehend a statement and then look at, okay, taking this statement and what would things look like from future state should you decide to move to a model where you're going to charge your customers a fee to accept a credit card. Anything else you'd add on the statement there, Jamie?
No, just if there are hidden fees and there's questions that you might have, the best thing you can do is just kind of throw that over the fence. We don't mind taking a look at it, even if you're not really in the market right now to look for a new processor. We're still willing to review all of those fees and give you some insight.
Awesome. Okay, so Jamie, feel free to jump in here, but on this slide, I think the important takeaway is a surcharge program allows you to basically reduce your fees that are associated with accepting credit cards by up to 85%. And that's something that goes directly to the bottom line of the organization.
Yeah, if you think about it, Chris, all of the your consumers are utilizing credit cards that allow them to collect miles, points, rewards. So they're using their credit cards to their benefit. It allows them to curve the amount of time it takes before they have to make payment to those. So they're utilizing those cards as a convenience to themselves. it would only benefit your organization to offset that expense because those are the most highest expense credit cards.
So what you're saying is that essentially, if you accept a rewards credit card, there's a cost associated with those rewards and you're paying for it. Like the air
That's right.
miles and the cash back, that has to come from somewhere, right? Mhm.
Exactly. Those issuing banks aren't paying for it. That's coming out of the
Yeah.
pockets of merchants.
Yep. So I think the other takeaway on this slide is that the big red box with the check mark, KeyBank has a 98% retention rate since inception. I'll just briefly explain that stat. Of all of our merchants at KeyBank that have moved to charging the 3% fee, moved to surcharging, 98% of them have remained on that model. There's only been 2% of merchants that chose to go back to conventional processing. And we like to share that simply because there's typically, you know, if surcharging is new to you and your organization, there's typically a lot of concern, and rightfully so. You don't want to upset the apple cart, right? You don't want to implement something that's going to affect sales or upset your customers. So we thought that stat was useful to share for those of you that are considering moving to a model, a surcharge model.
And the customer really doesn't need to look at it like it's not a punishment. It's you have alternative payments. You can pay with check, you can pay with cash, you can pay with your signature debit, your PIN debit. There are alternatives. It's just when it comes to those higher rate credit cards, this is where you're offsetting that expense.
So we did lump all our polling questions together. I just wanted to mention that, like, you know, there was the majority of you are seeing surcharging in your area, whether it's at restaurants or other merchants. You know, some gas stations have a cash and credit price. So I can speak, you know, for myself in my local market and when I travel, definitely has become more prevalent. You know, a big thing I like to share is I went to my state fair last year, and you know, this doesn't really compare to ag retailers, but pretty much majority of the vendors at the state fair were charging the fee. And we'll share the JD Power stat in a minute, but it's, you know, a vast majority of small businesses are looking at this as a way to reduce their card acceptance costs.
Okay, so in your industry, the only constant is change. Business is changing, it's evolving constantly. One of the items that is within your control is how you accept credit cards and whether or not you bill a surcharge. So that's an easy identifiable line item on your P&L that you can absolutely take control over and reduce. You may advance unless you have any other items to add.
No, I think that was well said, Jamie. Yeah, it's really about with everything going on, geopolitical events, all these moving parts. I think it just drives the point home of why businesses are considering surcharging. And so to expand on that a little bit, you know, what's important on this slide, there's two main points. There's the why and the what. In terms of the why, which is that left-hand box there on the screen, what we're hearing is ag retailers are tired of paying for their customers rewards points, air miles, cash back. And really how surcharging works, and we're going to talk a little bit more about this in a minute, but you can only surcharge credit card transactions. You cannot surcharge debit. 3% is the maximum amount that you can surcharge in any state. That's a federal and card brand regulation. And so just make sure if you're going to start surcharging that you work with a provider that understands what those guidelines are. Jamie and I have seen other providers out there in the market that are allowing their merchants to surcharge above 3%. That presents, a compliance issue. And again, from a risk management perspective, what Jamie and I feel a compliant surcharge program is like really the most important aspect of doing this. which we'll discuss on the next slide in a little more detail of what that looks like. A close second in terms of like considerations is, how does your frontline staff communicate that surcharge to your customers? And it's right there on the screen. If you look on the right-hand side of the screen there, by giving your customers a choice for how, it's the last bullet point, giving your customers a choice with how they pay you. So Jamie touched on it earlier, but with giving your customers a choice with how they pay, if they pay with a credit card, there'd be a 3% fee. If they use a debit card, check, or cash, there's no fee. And so instead of like forcing that 3% on your customers, you make it their choice. And that's really, from a best practice perspective, the most important way to minimize customer pushback when you're moving to surcharging.
Yeah. And if I could add to that, Chris, it's not just the education for your customers, it's education for your employees, because the employees need to understand that there's a cost to doing business, to accepting credit cards. And if you're providing them that information up front, they're going to be better poised to convey that to the customer.
So how does surcharging work, Jamie?
Yeah. So surcharge, as Chris already mentioned, is a 3% charge that's passed back to the cardholder. There are regulations surrounding how that has to look. So if you're processing a $100 sale and you're charging a 3% surcharge, that 3% line item has to be displayed. One of the value adds with KeyBank is that we have that technology. You don't have to reinvent the wheel. We're already doing that for our customers today. Now, your debit card discount, you're still going to have an expense there. While we can offset the expense of the credit cards, the reward cards, the business cards, et cetera, when it comes to the debit cards, prepaid debit cards, and signature debit cards, you are going to see a 1% discount. So that's what it looks like. Again, disclosures, make sure that if you're going to adopt this type of pricing program, that you are providing information that you are going to be passing this charge at the point of sale, at the point of entry. The more you over communicate, the better your customer is going to understand. That way, when they are ready to pay, that they understand that this is what's going to happen unless you use an alternative form of payment like that PIN debit, signature debit, cash, check, what have you. As we already mentioned, surcharge is highly regulated. We make sure that within our system that we have the capability to send out to the card brands the amount that you're going to be surcharging. That's not left up to you. We ensure that you're not profiting from surcharging, because interchange and assessments, those fees can sometimes come in around 2.5%. So the fact that we are collecting 3%, you're collecting 3% right out of the gate, we're making sure that we're collecting that amount back at the end of the month. Now you get to carry that total the entire month, and we'll go into more detail on that, but just really wanted to cover what those disclosures look like. Any that I missed, Chris?
I think the other point to expand on is on the communication front. And for those of you that maybe do monthly billing and you're accepting credit cards from other businesses, we do also provide a letter template that you can send out that this change is coming. And so to Jamie's earlier point about over communicating, that's really what makes implementing a surcharge program successful, is that communication. And that letter, the more times people see something, that the more likely they are to remember it, right? So that letter is a good example of that in a best practice for over communicating, to Jamie's point. So with this, Jamie's going to cover this, but this is a kind of a real world example of estimated economic impact. So what this just takes, an amount of $250,000 a month in card volume and estimates the savings. We are glad to do an analysis like this for you, and we'll talk more about that at the end of the call. But yeah, Jamie's going to talk through some of the economic aspects of surcharging and what it looks like for you.
Sure. So just as an example here, to the left of your screen, you see non-surcharge credit. To the right of your screen, you see surcharge collected. Within this example, again, we're going back to simple math. $100 sale is going to come in. The transaction amount, let's just say taxes are not included here, $100. Now, in the event that the cost of processing that transaction is, say, roughly 2%, now you've paid $2 for that $100 sale and you've walked away with $98. In a surcharge environment, what you're essentially doing is you're still billing the $100. There's an additional line item educating the customer that they're paying the 3%. That 3%, of course, equals that $3. So your total amount for that sale is $103. So $3 is paid to your organization. So the way I look at this is this is money in your account that you get to float for the remainder of the month, because we don't collect those fees for that 3% until the next month. So that entire month, you're floating this 3% through. So it definitely does help your cash flow. At the end of the day, we, again, come back and collect that by billing 2.9126%. I know that we've shortened it up here a little bit, but it does net out the same. So you're collecting $3 up front. We're taking $3 back at the end of that month within the billing period. So you've still made $100 off of that transaction. Cost you nothing to take that sale. With the compliant program, again, we'll kind of double down on this, the fact that it's 3%. We can't go lower. We certainly can't go higher because it's all regulated. And the only cost to your organization at that point is the prepaid debit cards, signature debit, and PIN. So those are those three categories that you're going to end up paying for. And then there are very few like assessment charges in Clover Security, which is a PCI product that we support. So Chris, anything you want to add to that?
I think at a high level, the big takeaway from this slide is if you're accepting credit cards today with this $100 transaction and you're not surcharging, your bank account essentially gets funded $98 at the end of the day. And if you move to surcharging, your bank account's going to be funded that credit card transaction the full $100. That's the big takeaway on the slide. There's a lot of technical discussion behind the scenes, but that's what I would say is important. And lastly, Jamie and I can show you exactly what this looks like for your organization if you're willing to share credit card processing statements with us. All right, I touched on it a couple times, but this is the JD Power stat. Here at KeyBank, we like to make data-driven decisions. So we went out and got some data to share with the group. And this was last year, so fairly recent, 65% of small business revenue was processed with credit and debit cards, and 34% of merchants across the country are adding a surcharge to credit card payments. That number is likely higher than 34% because this study didn't take into account the prohibited states. So you cannot surcharge in Connecticut, Maine, or Massachusetts. And then there's 4 other states that have specific rules pertaining to their state, like New York, California, and Oklahoma, as well as Colorado. So again, just wanted to share this with the group as a national statistic that the market is sort of moving in this direction where if you're a merchant that accepts credit cards, you're starting to recognize that there's a cost associated with this, and there's avenues to avoid paying that. Okay, I mentioned it earlier, but the biggest kind of thing that we hear from merchants when we start talking to them about surcharging is, I don't want to upset my customers. And so we put together this slide to help everyone understand the way that we approach it to minimize customer pushback. We've touched on a few of these, but just to reiterate, over communication to Jamie's earlier point. So signage, you're required to have signage at the point of entry and the point of sale. And then really, if you're going to begin surcharging, make sure you work with a provider that is going to help train your staff in how to communicate that to your customers, giving your customers a choice. Ensure debit automatically routes with no fee. What that means is make sure you're working with a provider that can provide you with credit card terminals that recognize if your customer is presenting a credit card or a debit card. And then use technology to automate compliance. That's very similar there in terms of, the machines and the way that it works. And Jamie, correct me if I'm wrong, but the first 8 digits of a card will identify if it's a credit or a debit card. Is that correct?
That is correct. That's the BIN.
Yep, the BIN number. So with that, we'll move to the next slide, but that's kind of the secret sauce to minimizing customer pushback. From going down this path, so many times over the last 3 or 4 years, it's like surprising that the number of customers that have moved to surcharging coming back to us and saying, man, our customer pushback was less than I expected, but I just had it in my head it was going to disrupt the Apple Cart.
Do you know why that is? It's because they were doing it right. I know that probably many of us have been to retailers or other businesses where they're doing it wrong. They're not giving you a choice. It doesn't matter if you hand them a credit card, a signature debit card, they're billing that surcharge. There's not a separate line item on the receipt. So there are a lot of companies out there that are doing it wrong. And that adds to customer frustration.
For sure. This is so our last polling question was related to equipment, and I'm going to talk about equipment here in a couple of slides, but when I say equipment, I mean credit card terminals. I know it was kind of a mixed bag in terms of when for the audience when the last time you replaced your terminals, but I'll touch on the specific equipment here in a couple slides. Sorry, Jamie, I
That's all right.
have a lag here. All right, so and we can just, I guess, briefly touch on the equipment. I guess the machines that you see on the lower right-hand side of the screen there, those are Clover devices. Again, we touched on it on the last or 2 slides ago, but if you're going to begin surcharging, make sure your provider can offer you like sort of the latest in technology, and offer your customers a modern payment experience. The Clover devices you see on the screen there are have great functionality with Apple Pay, tap to pay, etc. They do recognize if your customer is presenting a credit or a debit card so that you can remain in compliance. And then I guess secondly, the way that your customers want to pay you is changing. And kind of goes back to my earlier point about offering a modern payment experience. Many customers want the ability to receive a secure payment link via email. And so making sure that you work with a provider that can offer that, where, instead of having a process in place where your customers call in with a credit card number over the phone, you can say, hey, what's your email address? Let me send you a secure payment link. And that makes that whole, process of accepting payment remotely a lot more efficient.
And that's what makes Clover so special anyway, because anyone that gets the Clover is also getting the virtual terminal. So you have the ability to add QR codes. You have the ability to add, hosted payment pages. and you can do virtual transactions. You can bill automatically on a monthly basis, or whatever frequency you want to do. So there's a lot of benefits to Clover. It's not just the hardware itself.
So where do you start?
All right. So, evaluating your business model, consulting with your KeyBank representative, Chris or myself, we're happy to take a look at the statements. We can carve out some 15-30 minute conversation so that we can go through the statement, review to see whether or not there are hidden fees, whether or not there is an additional cost on your interchange or an additional cost on your assessment. Sometimes that's really hard to uncover unless you are an interchange or an assessment expert yourself. I think there's few of us out there. So there's a lot of different ways that we can uncover those expenses, and we're happy to help facilitate that. Our KeyBank contracts do not have any type of contractual penalties. There's no cancellation fee if you decide that you want to exit before our 3-year term. And if you're not ready for surcharge yet, we can still be a good partner. You can still consult with us, and we'll still give you our honest feedback, and we'll go from there. But KeyBank helps hundreds of businesses, and Chris is a testament to that. He's been all over the organization. He does a fantastic job with helping customers, doing these webinars, being out in the market. So we are more than happy and well poised to support you.
Yeah, I would add to that and echo that. So the last bullet point there on the middle box, if you're not ready to surcharge yet, we can still help you find other avenues to reduce costs. We've done that with many other ARA members over the last few years. And what I would also add to that is if you wanted to speak with another ARA member about their experience with KeyBank, we'd be glad to connect you. In terms of what does the process look like let's say, okay, I'm interested in this, I want to move forward, I'm tired of paying all these fees, I want to be able to reduce that. The timeline is, first of all, we move at your pace. And so kind of in terms of what the process looks like, it's sending Jamie and I a copy of your credit card processing statement. We will analyze that and get back to you with what the economics of what surcharging would look like at your organization. And, more importantly, what's the dollar amount that it's going to save you on a monthly and annual basis. And then from there, put together a transition plan to implement, which is usually, within 30 days. Obviously your month end plays into that, or where we're at in the season. We don't want to do it at a busy time of year for you, but just wanted to share kind of what it looks like. Want to take us home, Jamie?
Sure. So the key takeaways here: surcharging absolutely will reduce your cost. You will increase your revenue. You'll have cash in your possession throughout that 30-day period until your fees are collected. We take care of all of the compliance and transparency. Technology is something that we have access to. We also have other technologies that we've been working through to certify for surcharge. So, let's just say that Clover is not an ideal fit for you, which it should be for about 99% of businesses. But in the event you want to look at something different, we can certainly take a look at that. And there's not a one size fits all. So, if you find that surcharge is not going to be your cup of tea, we can absolutely reverse and go into a different direction. But I think really taking a look at those statements for you first and foremost, and giving you that honest feedback is really where we can start to get the conversation started. And of course, Chris and I are happy to have those discovery conversations with you and move the ball forward.
Love it. We're going to move to Q&A. Thank you, Jamie and Hunter. If there's any questions that came in through the chat, we'd love to address those. I'm going to navigate back up to the slide that had Jamie and I's contact information on it, so that if anyone wanted to reach out to us after the presentation for further discussion, they have our contact info.
Wonderful. Thanks for a great presentation. I see a couple questions in the chat. The first one is, You cannot surcharge for flexible savings accounts and health savings accounts, correct?
For
Jamie, do you want to take that one?
Yeah, sure. So for SFA or I'm sorry, FSA, the only rules and regulations that we have from a compliance standpoint right now are PIN debit, PINless debit, and prepaid cards. Those are the restrictions. We can certainly verify with our compliance team if that has changed and gone into a direction where HSA and FSA are no longer allowing that. But today they are.
Okay, next question. Can KeyBank provide surcharge anywhere in the United States?
We can, as long as it's not a prohibited state. And we kind of talked about that earlier, but the prohibited states are Connecticut, Maine, and Massachusetts.
And if I could add another item there. So let's just say that you operate in a state outside of where those restrictions are at. But let's say someone from Massachusetts is at your location, they want to use their credit card. Because that card issuer issued that card to that person that resides in Massachusetts, when you go to bill them, that 3% will not be applied. So that's something to be mindful of.
Yep, built into the technology. Good call out.
Next question. We're on the fence about surcharging. Can you talk more about other ways to reduce our credit card processing fees?
Yeah, absolutely. So we often find that even if you're not ready to move to surcharging, that there's efficiencies to be gained just by reviewing your statement. And what we find is a lot of providers when they have your business for a long period of time, they do periodic rate increases that you might not notice. They might do it annually at a little bit at a time, but over the years that adds up. And so it's just something that we recommend to all of our clients that you review your card processing statement at least once a year, whether it's with your provider or with another provider, just to make sure that your rates are within market. And there's a lot of strategies for us to help reduce your card acceptance costs, even if you're not ready to surcharge.
Next question. What's your experience with surcharging American Express?
We have it built into our system, if that's what you're asking. If American Express has a debit logo on it, which I have not seen in the industry, not looking at statements every single day, of course, but we have the technology built in that card is billed the same as your MasterCard, Visa, and your Discover. So we're well positioned to bill that surcharge on the American Express cards. If I could take us one step back to the question concerning FSA and HSA, I want to make sure that we're clear that some of those cards are loaded cards. So they have the debit networks on the back of them. So if you have an HSA or an FSA card that has the debit logo on the back of it, it would be excluded from that surcharge.
Next question. Do you see a measurable uptake in cash and check to avoid surcharging?
So this depends on the specific merchant. So we for in general to specifically answer check and cash, in general, no. In general, there's not, because let's face it, not a lot of consumers or businesses are carrying around a checkbook and or cash. There are exceptions to that. What we do see is, if you are a merchant that accepts credit cards from consumers, that there is an uptick in debit, meaning let's say today you receive on a monthly basis about a 50-50 split. 50% of your customers are presenting credit cards, 50% are presenting debit cards. What we see is that generally goes up to a higher percentage of debit. just because it's like over 85% of consumers in the United States that have a credit card in their wallet also have a debit card. And so if you think about it, if it's a large transaction and there's that 3% fee that they get with the credit card, a lot of consumers at that, when you give them the choice for how they pay, they might choose to break out their debit card. And so what we do is if you get us your statements for an analysis, we'll bake in an assumption that that debit is going to increase so that we can give you an accurate picture of what surcharging would look like at your organization.
Next question. If a customer from a non-surcharge state makes a purchase in a surcharge state, do they pay the surcharge? I think you might have answered that.
They do not.
Yep, that was already addressed. Great question.
Yep. Q&A and chat are still open. We want to thank everyone for attending today's webinar. Thank you to Chris and to Jamie for joining us today with great presentation. Additional thanks to all of you who participated. We'll leave their contact info on the screen for just a bit. Again, you can access this webinar recording on the ARA member-only dashboard. I want to thank Chris and Jamie again for the great presentation today. Thanks.
Thank you.
Thank you.
Bye.